Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and this week I'm continuing the Zacks tradition of having these summer college interns on the show. And we're joined this time by Zacks intern Mitchell Moore, who's joining me to talk about how can young investors find the next Google, or maybe even the hot industry, or interesting places where they might be able to invest as they move up and out, or even just are investing on their Robinhood app. You might be surprised that some of these ideas could be right under your nose if you're Gen Z or millennials. I don't know where the cutoff is. It's somewhere in there. But a lot of the Gen Zs are in college now, and you might be able to find some interesting investment opportunities right there on your own campus. So welcome, Mitchell.
Well, thank you for having me on the show.
Good. It's good to have you. So just to clarify now, you are in school.
Yes, I'll be a junior.
Okay, and you're at Northwestern?
Yep.
Here in Chicago, or Evanston, Illinois, we should say, to clarify. And okay, so a lot has been going on at Northwestern, and the topic for this podcast kind of came up because you and I were discussing one of the days here at Zacks about Northwestern's own investments and the R&D some of their faculty are doing, and they have like a big like biotech and biomedical research departments at Northwestern. And they have successfully launched at least one that we were talking about. And the name of that company is, I shouldn't even pronounce this. I'm super bad with names anyways. Aptinyx, I guess. It's APTINYX. Why do they have to put all those like Y's and X's in all these names? It sounds like, I know, it sounds cool. But the ticker, I can say that easier. It's APTX. And this is on like gene therapy technology. Yes. And they're specifically focusing on some cool areas like Parkinson's and nerve disorders. But this was originally developed through a faculty member, right, at Northwestern. Mm-hmm. And a lot of you guys who are students there, you know about this because Northwestern got a lot of money when this company went IPO, right?
Yeah. Northwestern also made a lot of money with Lyrica, which they sold to, I believe it was Pfizer.
Yeah, one of the big guys, yeah.
And Northwestern, the school has made, I think, upwards of $2 billion for the endowment just off of a professor randomly discovering this drug, running tests. And they're also making a lot of money on gene therapy. And all these labs are labs that students are in day to day.
Your friends, your roommates or something could be in there.
My roommate currently is in the lab of the professor who invented Lyrica.
Wow. So, okay. Yeah. So you have like kind of like insider insight, you and your roommate, on what is going on there and like what areas they're looking into, where some breakthroughs might come in. And this is what I mean for like young investors out there, no matter what school you're at, especially if you're at one of the bigger research universities, though, that helps. If you're at a small liberal arts college, okay, that's not, your chances are a lot slimmer. But like some of these bigger research, both public and private schools have a lot going on, and it could just be right there in your dorm room. Now, is anyone in, like, say, your old dorms? I'm sure you're out of the dorms by now, but is anyone, are they, like, still developing apps in their dorm rooms or anything like that that could also be kind of on the cutting edge?
So a lot of universities, and we do as well, have a garage program where it's an incubator hub for students to go and get support on patenting and how to start a business and how to develop their product and everything. And so I have a lot of friends who are developing various things from apps to biotech wearable products to commercial retail businesses.
Wow.
All through the university, they can apply for funding. They have lawyers on hand to help them with incorporating and everything like that.
Wow.
It's really,
okay.
Really cool.
Yeah, that is cool. And that brings up to mind one of the most famous stories, I feel, of like students creating things. And that has to do at Stanford in the late 1990s when Larry Page and Sergey Brin were PhD students there in computer science. And they had this idea for what turned out to be Google. And they got help from Stanford to, incorporate and then grow the business, make sure it was running and all of that. And Stanford took a 15% cut off the top of royalty revenue, I guess it was called. And then a whole bunch of the rest was split in that case between the inventors, university departments, several of the larger schools within in the university, and then some of the other faculty members. The Wall Street Journal was reporting at the time when Google went IPO. Some of the other faculty members also owned initial shares because they had also funneled money somehow to both of them to develop Google. And so when they went public in 2004 or 2005, I think it was, they had a decent sized equity stake, although looking back, they ended up selling 10% at the IPO, which makes some sense. Like they're going to cash in initially. And then they sold the rest of their position only like a year or something later at, I think it said like $186 a share. It's like, well, maybe they'll learn from that. Like, well, maybe they should have kept like a little bit of it to see what would happen going forward. But again, it's free money and they might as well cash in, right? So they got a couple $100 million from it. But I also found some interesting stats that are more recent. And in a 2017 article I found on Google, strangely, but that article said that out of all of Stanford's investments, they have only 77 of them out of 10,000 of the technologies that have been developed in, like, say, the last 30 years, I think it is, have made more than $1 million. So finding the next Google is difficult to do, even for the universities. They do what all startups end up doing, or venture capital funds, and just throw money at various things and hope something sticks, because they all don't. And so they don't, even at Stanford, which is probably why they sold out so quick when one did. But I thought that was an interesting stat. I also found that University of Chicago recently endowed a $25 million startup fund to invest in university-based startups out of its endowment for the same thing. Now, whether or not they'll get their money back either, no one knows. These are just like gambles and roll of the dice. But for the purposes of our podcast, I do think it's interesting for young investors because you are around these things on a daily basis if you go to one of these schools, and you can at least see. Now, some of this stuff may not be public right now, and it might be years. So say you were in the same dorm with Mark Zuckerberg when he created Facebook, and you all were using it at Harvard, and you thought this is super cool. Well, it took pretty many years before they actually went IPO, and then you could invest. So that wasn't really going to help you that much, I guess, to be in the loop on that one. But it at least would have opened up your mind to the possibility that, hey, there's this thing called social media, whatever this is, and this is kind of hot. We're all on this, and these kinds of platforms or something could be a good investable idea. Do you know anyone who is kind of scouting out ideas and trading in at least hot sectors on Robinhood based on what they're seeing at school?
I know what a lot of people do is, instead of going the stock route, if they find a company that's being incubated on a campus, they'll go and try to get in on it because new companies always need people.
Yeah.
And even if you find a cool biotech wearables company, I have a friend who is a finance major who was like, hey, I'll help you run your finances for the next couple of years if you give me a couple percent.
Okay. So it's a job. It's not necessarily investing, but then you are investing in it anyways by trying to get a job there.
Yeah, because startups like that, it's generally not a huge time commitment.
Yeah.
And it's fun to do. It builds your resume, and you can also make some money if it becomes successful.
Yeah.
I do know a lot of people who use apps like Robinhood or Stash or things like that to trade, and kids generally focus on the things that they're exposed to. So if you see a lot of tech stocks on your campus, you're going to be investing in that kind of stuff because you know about it. Another, if your chances are you're not the only person really with an idea for a
Right.
startup. So you can, if you see a really cool company on your campus, you can go and find something probably pretty similar to it that's already public.
Yeah. Okay.
Yeah.
That might be some good tips for
Yeah.
people who are out there, younger investors looking around to try to find the next great thing. Of course, there's no guarantees because I did look at that Epinix, I guess that's how you pronounce it, from Northwestern. APTX is that ticker again. And it traded as high as $32 for its 52-week high, and it's now at $3.20.
Yeah.
So it's come way down off of those IPO highs, and its market cap now is only 108 million. But this would be one you'd want to trade maybe more than like be a long-term investor in, which I'm sure many people are doing on campus anyways. What would be the other popular things? Does anyone think about trading based on, say where you order pizza or what restaurants you go to, or even like Chipotle? Oh yeah, we still like it, so I bought that stock when it crashed down. What about that?
I have a lot of friends who invest in stuff that they consume generally more on the staple side of things because they see it as a safer investment.
What does that mean?
So they'll they'll be like, oh, I really like Crest toothpaste. I'll invest in that because, people aren't going to stop using toothpaste anytime soon.
Really? Interesting.
Because as young investors, you have a lot of time to see that grow.
You do.
Really need your returns in the next couple of years.
Yeah.
So you can throw a lot of money into more stable investments and see it 5-10 years down the road when you really need the money.
Okay. So a lot of your friends are trying to find kind of like mature companies, I would say.
Yeah. And then, it's always more fun to invest in startups.
Yeah. Okay. So it's a mix,
yeah, it's
probably.
a mix. But
what about like dividend stocks? Are they like into those?
I don't see a lot of that.
Okay.
Because
that would have scared me a little bit.
Yeah.
But I don't know. I talked to some millennials and they were like all into REITs, which normally pay dividends too because it's real estate.
Right.
And so I was kind of surprised by that the millennials who are a little bit older would be into, getting that dividend. But each generation has its own kind of things that they look for. So that's why I am surprised that they're trying to buy like Crest toothpaste kind of thing. But yeah, what other kind of, are they interested at all in the Uber, Lyft? I know you guys take all the ride shares.
We do. I don't know many people that have invested in it because of kind of how scary high its valuation was.
Yeah.
And because, kids, we don't really read the newspaper, but kids are generally up to date on what's going on through their phones. So everybody kind of saw all those warning signals online about valuation and everything. And I think kids, at least that I know, generally stayed away from it.
Okay. What about like socially conscious investing? Do people have any issues with that? Like not buying an airline stock because the airlines, burn so much fuel and, hurt the environment, or even not buying an energy company at all because they don't want to own anything like oil related?
I have seen a little bit of that.
Okay.
People try to generally stay away from, obviously like firms that are, in lawsuits for environmentally.
Right. That would make
things
sense.
And stuff like that. I haven't seen too much of like a hard line, stay away from everything that's bad for the environment. But it's definitely probably in the back of most young investors' minds.
Okay. Because I've been asked a couple times on Twitter whether or not the oil stocks are doomed because the younger investors won't buy those types of companies. And I don't know. So that's why I'm asking.
Yeah. At the end of the day,
like,
I think, kids are still human, so we still care about money.
Yeah, right.
So if there's returns to be had, people will be there.
Right. Okay, well, what about the shopping mall? We've talked about that here in the office too, offline. And it sounds like you and your friends do not really go to the mall.
No.
Okay.
When we were younger, we would go, probably middle school age, we would go as just like a weekend activity to
hang out.
Hang out and run around and,
But now that you're in
kids do,
college, no.
Yeah, no, I was trying to remember when we talked about this the last time that I shopped at a mall, and I think it was probably 3 years ago.
Okay. What about like the kind of entertainment malls? Would that be in play? The ones that have like the movie theater, the farmer's market, I don't know, like the, arcade type of places or...
We didn't have an entertainment mall close to us where I grew up.
Okay.
But we did have I think it was like a bowling alley movie theater complex.
Okay.
Which is kind of similar.
Yeah.
And we used to go to that all the time.
Bowling. Do people still bowl? Do
oh,
they
yeah.
bowl at Northwestern?
Oh, yeah.
Okay.
I mean, it's
I like
something to do,
bowling,
and
but that seems like a Midwest thing, kind of.
yeah, it's generally pretty inexpensive. So
Yeah. And in the winters, what
fun
else
to
do we have to do?
Right. Exactly.
Is that like electronic bowling, or it's still you picking up the ball and you're throwing it down that?
Oh, yeah.
aisle?
It's still-
Okay. I wonder if they're going to try to like get rid of that, like to say like, oh, this could all be. Haven't they do have electronic bowling, don't they?
I don't know. I've never seen it.
I don't know.
The bowling alleys that
Because it's the
I've
fun
seen
thing
are-
is whipping it down the lane.
Yeah.
Okay. So
They're very updated now, and they
they have electronic scoring
yeah,
now,
and
right?
you can order food to your and drinks to your lane, and it's
Okay.
very chic and
Wow.
21st century. But it's yeah.
I need to come up there, try it maybe. Okay, so the mall isn't totally doomed if it has like other things to do
Yeah.
there, is what it sounds like.
Yeah, I think
Not just shopping.
the older model of just shops will start to die. But if malls can bring in customers with other attractions and then have people shop while they're there, they'll still probably be able to survive. I would
Okay.
guess.
What about loyalty programs? Are you and your friends into any of those? Do you pursue certain types of brands if they have a loyalty program? I'm thinking of like Domino's Pizza now has a loyalty thing. If you
Yeah.
order a certain amount, you get like the free pizza. Does it fuel you to stay loyal? Because that's what it's supposed to do, or not? Or do you just sign up for all of the loyalty programs and so you're in a mall anyways and it doesn't really matter?
What I've seen is a lot of kids will sign up for a loyalty program if they already use a product a lot.
Okay.
So, kids are busy all the time and they don't want to spend the time 15 minutes every day signing up for this loyalty program and that loyalty
Yeah.
program. So, like everybody and their brother signed up for Starbucks rewards, right?
Okay.
Because everybody goes to Starbucks.
Right. What about the Domino's one?
I have a couple of friends. We have a Domino's in
Okay.
Evanston, and everybody orders Domino's all the
Yeah.
time. So a lot of people have that.
Okay.
I don't see a lot of people, walking into CVS for the first time and being like, "Oh, let me just sign up for the CVS rewards right now."
Right.
It's more of if you use it a lot, you'll then sign up for the loyalty.
Okay.
Which will probably then keep you around.
Yeah. Now, what about some of the streaming services? I know a lot of you in college are still like on the parents' plan and all that, but I just saw some articles indicating that Disney, when it rolls out its streaming plan, is going to try to restrict who you can share it with. I'm sure they'll still have like some kind of family plan, but people share their passwords with people other than family too, as some of us know, on various of the plans. So, what kind of streaming plans would you guys be willing, or like with the Disney one, is there real anticipation of that one rolling out like on colleges right now with you and your friends? Like, does anyone care about the Disney streaming?
I haven't heard a lot of people talking about it.
Okay.
I do know that a lot of colleges provide certain streaming plans.
Okay.
So like Northwestern gives us, I believe, Xfinity
Okay.
and HBO Go.
Oh, okay. That's nice.
I think.
Yeah.
I haven't used either of them.
Okay.
I know a lot of colleges offer various different plans to their students. As for the Disney thing, I haven't heard a lot of buzz about it because I think also the buzz really started this summer.
Yes. It might
so-
be as it gets closer.
Yeah.
People might be like, yeah, I do want to get all those Marvel movies and Star Wars and all that stuff. Okay. What about, let's talk about some other things. What about social media and what you and your friends are on? Is it Facebook? Probably not, right?
Facebook is definitely there.
Okay.
But less so in a pure social media sense.
Okay.
Facebook is used for planning events and things of that nature, groups like buying and selling furniture, or
Okay.
like our class has a Facebook group.
Yeah, I was going to ask if your
Yeah.
professors use it.
I've never seen a professor
No.
use it.
Oh,
It's
okay.
generally just student groups use
Oh,
it a lot to
okay.
like blast out notifications.
Yeah. What about, well, Instagram, Twitter, are those the more popular platforms then?
Instagram, Twitter, Snapchat
Okay.
are the most popular like pure social media platforms.
And do you have to be on all of them?
No, you kind of. I would like Instagram and Snapchat. Pretty much everybody's on.
Okay.
Twitter's kind of. I'd say
Hit or miss.
probably 15-20% of people aren't on Twitter.
Okay.
Maybe
Interesting.
even higher than that.
And does everybody have a LinkedIn profile? I'm assuming.
Yeah, pretty much. A lot of universities also have their own proprietary sort of LinkedIn
Right.
style things. Like we have Handshake now, which
Okay.
they just launched last year. That's a school specific platform. So employers can come to Northwestern and say, hey, we want kids that fit these criteria.
Yeah.
Show us who you have.
Okay. Wow.
So it's sort of a two-sided thing, which is nice.
Did you fill out a LinkedIn profile while still in high school, or did you wait until college?
No, I waited until college.
Okay. I'm just curious, like
Yeah.
when people are getting onto that. It would seem to be a college-y type thing, but I don't know anymore. Who knows?
Right.
Maybe some people wanted a high school one. I don't know.
I had a couple like hyper motivated friends in high school that did it, but I don't know if they probably didn't get any use out of it back
Right.
then.
Right. I wouldn't think so. Not as much. Okay. All right. So we've gotten a lot of ideas out there for people who are on their own college campuses. They can kind of look around. I always tell people, that buy what you know is an actual legit investing strategy. And especially you guys are exposed to a lot of ideas, like especially if you have a roommate who's working in some of these labs or, on some, tech project or is in a startup or any of that stuff. Even if those companies aren't yet going public or public, you can still kind of look around. Oh, this is where people think the future is going. Maybe it's AI. I don't know. Maybe it's even like a new type of, clothing or something. You might still be like, oh, yeah, this could be really cool. And I will look around for other investments in that area. And they make it so easy now with like the certain apps that are out there that are really low cost. Is there any, you mentioned Robinhood and Stash, those are the two main ones really that you guys are using? Do people use like E-Trade and the older kind of trading platforms?
I haven't seen it.
Okay.
Generally, kids are by their phones all the time now. And so
Right.
it's really easy to stay up on your trades and see what the market's doing if you can just pull it out of your pocket and look at it.
Yeah.
I haven't seen anybody use E-Trade or any of the like traditionally computer-based services.
Okay. What is the view on stocks among your friends and peers? If I'm just asking generally because obviously you don't go around like quizzing everyone of like,
Right.
hey, do you like stocks or not, or that kind of thing. But is it? I would think, given that we've now seen almost like a 10-year rally here off the lows from the financial crisis, that they would seem to be like a good thing that you would want to be doing.
Yeah, people generally see it as if you have the competency or the know-how to do it, it's a pretty easy way to make money.
Okay.
That's how it's generally seen. A lot of people also are just scared of it.
Okay.
They're just like, I don't want to risk it.
Right.
Stay out of it.
Okay.
Because it's kind of scary at first to understand what really influences stocks and to get your mind
Right.
around the fact that, sometimes nothing really influences stocks.
Right. We've seen that plenty of times.
So yeah, it's a lot of people think it's a generally positive way to make some money, I think.
Okay, cool. Well, I like hearing that. And this was a good discussion about like what's going on the college campuses and like what you can find out there if you're looking around for the next Google, because clearly even Stanford didn't really know it had the next Google when it had it. Stanford also was one of the early investors in Yahoo, and they made a lot of money off that back in the day. And apparently Cisco is what I found in one of the articles as well. And so, yeah, they've managed to have some kind of connection with some of these big names, but a lot of the other ones didn't go anywhere, but that's par for the course.
Yeah.
So yeah, I do encourage people to like kind of look and see what are the hot areas that they're throwing the money into and what they're doing the R&D on to get ideas and to see if someone else is publicly traded out there that might be in that same area that could be a way to play it. So keep that in mind. And I'm going to recap some of the tickers we talked about here. Of course, there's Google, GOOGL. I actually own that in my own personal portfolio. Do you own that?
I do not.
Okay.
Not at the moment.
Then there's Uber and Lyft. I do not own either of those, and I don't think Mitchell, no, he's shaking his head to those. I do not own Apponix. I'm mangling the name again. APTX is the ticker there. And then there's Cisco is out there. I don't own that one. CSCO is the ticker. And then you could also look at some of the restaurants. We talked about Domino's. DPZ is one of my favorite of the restaurant chains because people across all generations like keep ordering off Domino's, and that app is so cutting edge, and actually the pizza's pretty good. I don't know. Like they got that new sauce a number of years ago, just after the financial crisis. That's really pushing their stock as well. I used to own Domino's, but I do not own it at this time. So keep some of those tickers in mind and keep your eyes open, and you might be able to find the next Google out there. But otherwise, you're going to want to join us here every week on the podcast because I'm going to be bringing you some more stocks and some other ideas here on the Market Edge. So be sure to subscribe. We are on Apple Podcasts. We're also on Spotify, and you can get us on SoundCloud, but get us somewhere. And I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.